You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, Jonathan Rose, how are you guys doing? So today started off awesome. We had a really good trade that we were able to take off in our advanced notice community. Our advanced notice community is where we find unusual options activity, the biggest option trades in the market, and then we just follow those. So that was a really good trade for us this morning in Halliburton. I'm going to walk you through that. But today's topic, guys, I want to talk about gold because in my opinion, gold is broken. Gold is disconnecting from every market. Whenever I see a market do something like that, I like to call it broken, and I'm going to show you a bunch of charts to explain why I think that and where gold is going. Yesterday's video, we talked about the mother of all buy signals. If you didn't get a chance yet, go back and watch yesterday's video, and don't forget to like. Whenever we get over 150 likes, we're always going to give out a free trade. Yesterday's video on the mother of all buy signals easily got over 150 likes, so I got another trade for you today. But the message from yesterday is we are bullish. The market is going higher. Volatility is slowly getting sucked out of this market. When volatility goes lower, markets go higher. It's risk. Volatility is risk. It's uncertainty. So when there's less uncertainty, markets go higher. When there's more uncertainty, markets go lower because the uncertainty is all to the downside. When the markets go up, there's no uncertainty to the upside. Everything is roses to the upside. All right, I'm going to get into the slide deck. I got the chat open. I love when everybody comes in, says good morning. Welcome. All right, here we go. All right, I'm going to start right here on the screen share, guys, because Bucky Bob made just under 100% in under a week. In HAL, H-A-L, guys, this was our unusual options activity trade that we had. Here is HAL. Look at the behavior. Those are 100 and 200 period moving averages. HAL did a big leapfrog over the 200 period. It's gapping. It is super strong. But if I was going to share how we did in the community, boom, 100%, 100%, 100%, 100%, 100%. So did you grab your 100%? Full disclosure, we are still long Halliburton. I am bullish Halliburton. We took off some of the position, but we're holding a balance because I think that we could have some really nice follow through with this trade. The great thing about these trades, guys, it's a fixed amount of risk. So if I look at Roger in at $1.17, it's $117 per one lot. You could do it for $1,170, and then you get out at $2,090. So great trade. Michael, 111%. Dale, 120%. Way to go. I love seeing that. All right, guys, we are going to talk about gold, silver. Now, I've been trading since 1997. It's the only profession I've ever had. Throughout every single step throughout my career, okay? People have a tough time believing this. Every single step throughout my career, I've traded something relative to something else. So I started in the business trading NASDAQ, and I traded NASDAQ relative to S&P. After that, I traded bonds. When I traded bonds, I traded the 2-year, the 5-year, the 7-year, the 10-year, the 18-year, the 30-year, all relative to one another. So now, if we're going to talk about gold relative to silver, nothing happens in a vacuum. What I mean is gold doesn't just move all by itself like it's doing. What does it pull? Gold is tightly correlated to other metals. Gold and silver is the longest historical tradable relationship. So when gold goes parabolic, like it has, it's pulled back a little bit, it's going to pull silver along. Now we can also look at gold minus silver, which is here. This is one chart, right? Gold minus silver. And I did that so we can look at them as one chart. Here's COVID. Silver got inexpensive after COVID, but now gold is stupidly expensive relative to silver. Nothing can ever be expensive on its own. Nothing could ever be inexpensive on its own. Things are expensive relative to something else. Your iPhone is expensive relative to other phones, relative to other releases, and for other years. Nothing can be expensive just on its own. But right here, I think we can conclude that gold is pretty remarkably expensive to silver. Well, what about some other metals? Gold versus platinum. Here, it looks kind of normal, right? Until it breaks out. When it breaks out, this is gold rallying and platinum not following at all. Funny enough, platinum's actually rallying quite a bit, but it's rallying, you can't even see it in the gold versus platinum chart because gold is grossly outperforming so much. Same thing here, okay? We take you to 2024. Aaron, nice trade on Hal, makes 150%. Thanks for sharing. This is gold versus copper. Gold can't be expensive to the world. Inevitably, that needs to break. Copper is extremely cheap relative to gold. Platinum, extremely cheap relative to gold. Silver, extremely cheap relative to gold. Professionals might sell gold and buy all three. They would do that as like a butterfly, playing for gold to go lower, playing for the copper, platinum, and silver to rally. We're not going to do that. That's probably a little bit too advanced for this presentation, but we are going to share a trade based upon gold being so expensive. And it's a good day for that because we're getting a really, really nice pullback. Before I get into the trade, I want to talk about skew. Skew is a really, really important term. It's something that we talk about often. In options, your skew measures the difference in implied volatility between your calls and your puts. What's more expensive? Calls, that's a big call skew. Puts, that's a big put skew. When a company is concerned about bankruptcy, if there's a big short squeeze and that company rallies, you're going to see a very big put skew because the street is thinking that stock's too expensive and that's going to come down. There's one industry that normally trades with a call skew. That's going to be biotechs. The risk in biotechs, the calls are more expensive because retail wants to play for a big jump in those biotechs. So that's going to be the difference between call skew and put skew. Right now, silver skew to the call side is higher than gold skew. That means that option traders are pricing in more asymmetry into silver options than gold options. In practical terms, the implied volatility curve for silver is steeper than gold's. Out of the money, silver calls cost more because silver is inexpensive to gold and the street is pricing silver to trade higher. So now, how do we find silver companies to invest in? This is taken from the CME CVOL tools, and this is showing skew, S-K-E-W. Skew, skew, skew. Silver skew, gold skew. Silver skew is trading rich relative to gold right now. Silver is inexpensive. Here is just silver skew all by itself without gold. Option traders think silver is cheap. That's why it's priced like this. So now, let's go look at some silver companies. And that's what I've done right here. A silver name that we trade, PAS. And what about some smaller names? AG, EXK, SVM, DVS. Smaller silver names. This is going to be your PAS up here. Actually, PAS is going to be the white one. It's going to be here. This is going to be EEK, EXK, and DVS down here. A name that I'm not too familiar with, guys. Just doing some research before we started. So, as I was doing some research, I think this name looks pretty cool. DVS. DVS is down 7% today. It's fine. I kind of look at that as like a bank error in our favor. Here's what DVS looks like. Dolly Varden Silver. I'm going to pull up the options. I'm going to cross my fingers that there's some good optionality in here. And if there's not, it's not terrible. These are inexpensive. Dolly Varden Silver, DVS. I like January. These fives, 55-cent bid or 60-cent bid. I would not pay more than 60 cents for these. Looks like there's some option buyers out here. DVS. DVS. Dolly Varden. We're going to do the Januaries. I'm going to write that down. So, let's do the DVS Jan. 5 calls for less than 60 cents. That's $60 of risk. And why? They are all correlated. They are all just silver. Once in a while, they'll get out of whack. Okay? Right now, the green, DVS. I'm going to pull up the options chain one more time. DVS, we're going to be in January. 60 cents, 55 cents. We are not going to pay more than 60 cents for these. And why are we doing this, guys? Because it gets us long silver. Why do we want to be long silver? Well, as I walked you through, silver right now is extremely inexpensive relative to gold. Guys, you can try out Masters in Trading at investorplace.com/challenge 2025. This gets you in our 7-day challenge where I think anybody can learn how to trade options. We need 150 likes for our free trade, so make sure you like, make sure you subscribe, and everybody in our all access, you guys hang tight. We're going to go over some of our open portfolio, and I'm going to answer any questions that you guys have. Hey, Chapman, we're going to talk about that more in the community as far as doing something against the trade. Awesome way to get in. If you want to get in the community, guys, investorplace.com/challenge 2025. All right, guys, thanks so much for watching. Hey guys, hopping back on. I'm gonna open up our Discord right now. I'm over on my screen share. Just pull up my Discord.